Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. Kelvin Wong, market strategist at CMC Markets, is our guest today. Great to have you on the show, Kelvin.
Hey, hi, Brian. Good to see you again and happy Wednesday.
Now, before we get your insights, Kelvin, we'll first take a look at crypto markets. Bitcoin is at 30,246.8. It's up 2.42%. Ethereum is at 1,790.22. It's up 1.85%. Across regional stock markets, the SGX is down 0.18%. The KLSC is up 0.29%. Shanghai is down 0.67%. The ASX All Ordinaries is up 0.32%. The Nikkei is up 0.82%. The Hang Seng is up 1.64%. And rounding up the numbers, we've got the Kospi, which is down 0.04%. Kelvin, what's your view on regional market performance this morning?
So overall, you start to see more greens versus red over here. So I want to highlight more important on the outperformance of this two market. One is the Hang Seng Index, which is it's I think close to 1.6%. So, but in fact, the Hang Seng Tech Index, the one that comprised of the China big tech stock, it's actually right now. Let me have a quick look. So based on the price right now, they're actually up 3%. So one of the reasons of this outperformance on the Hang Seng or the Hong Kong stock market, and primarily the main driver is the China big tech stock, is due to this more regulatory loosening measures. So if you recall that in the last 12 months or 40 months, so there's been a very stringent clampdown on platform technology company in China. So it seems to be the last 3 to 4 weeks, guidance has been pretty much loosening of this stringent regime in China. So in fact, stringent regime towards China platform tech companies. So in fact, just today morning around before noon, the Chinese regulators actually approved new license for 60 new online games. So that's actually another sign that actually indicate to the markets that hey, we are not trying to loosen the loose around the growth prospect or I would say the business operation of these platform companies.
Now, so Kelvin, in other news, Japan's economy shrank by an annualized 0.5% in the first quarter. So that data is a significant improvement on the initial estimate of a 1% contraction. Now,
Yes.
that obviously has improved sentiment in that market, but we've also got a couple of decisions out later this week. We've got the Reserve Bank of India's latest interest rate decision later today. We also have the ECB interest rate decision out tomorrow.
Yes.
Give us a sense of what you're looking out for with all of this.
Sure. So maybe let's talk about the current expectation first, or that what's being possibly priced into the market on ECB interest rate decision, which is out on Thursday. So what we could see over here is that over the last couple of weeks, guidance from the ECB President Lagarde has really started to hint to the market that hey, this year we're now starting to actually move towards normalization rather than 2023. So what she actually kind of guided the market that we was actually stop a QE program this next month, and also start to actually hike the first interest rate, which is on the deposit rate. So the deposit rate right now, which is the main policy rate, is at negative 0.5%. So what she guided the market is that there will be a first hike of 25 basis point in July, then followed by another potential 25 basis point somewhere around in September. In September. So that could actually bring the policy rate or the deposit rate, I would say, back to 0% from a negative. We call it a threshold. So what we could see over here, very interestingly, that has been already been priced into the market. So I'd like to share a chart about this, the euro dollar, which is the technical, the chart of the euro dollar. So you can see this euro dollar, it has been in a broad major multi-month downtrend, or a major downtrend since the start of this year. Okay. Then at the bottom of the chart is another factor that actually could potentially drive the movement of euro dollar is the yield spread differential between the US Treasury yield, the 2-year, minus the 2-year German bond. So we could see over here is that upward sloping orange line with the yield spread. It means that the US Treasury yield, the 2-year, is increasing at a much faster rate compared to the German bond. So that definitely put pressure on the euro dollar. So I could see that's why we see the start of this year, we see a very significant downtrend movement on the euro versus the USD. That means we're talking about euro dollar weakening against the USD. And what's interesting over here, right, since the low of 12th of May, you start to see some signs of this kind of broad-based euro dollar weakness starts to be losing steam. That means a bit of euro dollar rebound against the USD. So that is being supported by the yield spread that is being declining as well between the US Treasury yield, the 2-year, versus the German bond 2-year. But what's interesting over here is that the price movement, right, of this euro dollar strength seems to be stalling at this resistance at 1.076. Then we have 1.085. Interestingly, and what's this stalling of what we could see over here is that we start to see a pickup in the US Treasury yield as well. The yield spread. So what's being said over here is that the market seems to have been priced what ECB President Lagarde has already guided the market. Yeah, so this is what the market really be expecting. So unless ECB start to do a surprise move on Thursday, saying that, hey, instead of a 25 basis point hike, we will actually go for a much more aggressive hike, a guidance of 50 basis points. So that could actually renew this euro dollar strength back into the market. But for now, it seems to be that the boost of the euro dollar is being kept by this resistance at 1.076. And before we go, okay, let me share with you all the shorter term chart. What is the daily chart from here? The shorter term chart with the hourly chart. So if you look at the hourly chart, what we could see over here, technically speaking, it's been tracing this bearish double topish formation with the neckline support. Very quickly, let me at 1.064. Okay, so what we see, start to see a series of lower highs, which indicate to us that the bulls are very hesitant to push above much higher, above 1.076, 1.079. Okay, so if we start to see a break below 1.064 after, because this is the risk event, which is the ECB risk event, post the ECB press conference thereafter, we could see the euro dollar to actually potentially see further potential downside towards the next near-term support at this 1.055 level, at least in the short term.
Kelvin, thank you very much for your technical analysis. Much appreciated by myself and the audience.
My pleasure, Brian.
We've been speaking to Kelvin Wong, market strategist at CMC Markets, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Rajhi Bank's social media platforms. Thank you very much for tuning in.